All right, good morning and good afternoon. This is Trendy John from Simpler Trading. I hope everyone is having a fantastic weekend. And we are going to be covering the broad market analysis, looking at the 7th of January into the 12th. This will be really straightforward. I don't have a whole lot of updates, but we do want to talk about the econ data that's coming up, some earnings also kicking off the banks this week, which we're really excited about. And also, before we get started, please give this video a like and please share with any friends or family that might be interested in trading or that might be having a hard time. Again, my name is Jonathan. I'm a professional supply and demand trader. And so the different charts that I will be showing you today are based off of supply and demand, some Fibonacci, and then some good old trendy methodology. The first thing that I want to show you coming into this week is we have a full calendar, if you will, of econ data, although it's not very robust, but we will go through that very quickly. So starting tomorrow, these are Eastern time. Consumer credit is coming in at 3 p.m. Tuesday, we have the trade deficit coming in at 8:30. Wednesday, we have wholesale inventories and then New York Fed President John Williams speaking. Thursday, we have initial jobless claims, CPI year over year in the budget statement. And then Friday, the good old PPI and core PPI. Let's go ahead and move down as we look into the most anticipated earnings coming into this week. And again, I follow earning whispers out there on X, and this is the data or the names that I am looking at this week. Now, typically, what I do is I underline these names with green, and what that means is I have a special uh, way that I trade earnings, and these are the ones that I'm interested in when I come in and underline them on green. If you want to learn how I approach those, you can find some of those videos on my YouTube. But remember, you can also come over at Simpler Trading for $7 for 7 days and just check us out, and you can see how I'm going to approach that. Now, the names that I'm interested in, again, KBH on Wednesday, and then Friday, of course, banks, JPM. United Health Group, one of my favorites to trade as well. Delta Airlines, BAC, Wells Fargo, BlackRock, Citi, and those again are the names. Albertsons, I am interested. I'll be taking a look at the charts and see what I can come up with. And, just for giggles, I always think about this name, TLRY, and how it just got absolutely annihilated. And, is it coming back? We'll have to take a look and see. Okay. Moving on here, we are going to look at last week's neutral results. Now, I did push something out on X this week, just a few hours ago, matter of fact, and this is the strategy that I came up with years and years ago. And what I had in mind here was for traders, I kept hearing, hey, John, like, we have great trades, you guys do so great, but what about for the person that can't be in front of the screens all of the time? And so I thought to myself, well, there's got to be a really cool approach that we can do by using supply and demand and more of like a set and forget trade, if you will. And again, there's a very short video on my YouTube page that teaches you how to trade this setup. Now, I find the levels by using supply and demand, Fibonacci extensions when it is needed. But most of all, it is really straightforward. We look to go short underneath the red lines and we look to go long above the green lines, and it really is that simplistic. And the risk itself is the difference between these two. We can use equity, we can use in the money options, at the money options. Again, if you have any questions, please reach out to me. As you can see, last week worked very well. So if you shorted underneath the red zone here of 473 on SPY, we did end up hitting our last target here at 461. Of course, we flushed it a little bit, but we did reclaim it. Notice over here on the QQQ, our first three targets got hit really quickly. And then one of our live sessions, I came in and added targets. I just used um, our already indicators that are on there identifying demand to the downside. And you can see we ended up hitting all those targets to the downside. Now, again, if this is your first time watching me, don't worry, we're going to go into a chart and you'll be able to see this stuff a little bit clearer here just in a few minutes. Now, we do have our new neutral strategy going into this week for SPY and QQQ. This is where you want to take the chart itself or the video and come back and go ahead and pause here and annotate these levels on your chart. So again, these are fresh levels I used this week. I primarily used a daily and a 4-hour chart to come up with these. So notice when I zoom in here, it is a daily chart, and you may not see some of the structure that we teach, and that's okay. Because again, I went to a lower time frame to find some of those, and that's where we got the targets to the upside and the targets to the downside. The big thing that I would say about SPY this week is, we've come back 1, 2, 3, 4, almost 5 days. We came down 5 days into one of our previous levels. We started to see a relief bounce there, and we'll talk more in detail about that a little bit later. But we got the relief bounce so far from those levels. But the big thing is, if we continue to push down here, I would expect buyers to show up between 458 and 456. Okay, right about where this arrow is, and that's things if things really hit the fan and we start to pull back. But I'll give you my sentiment here a little bit later. On the QQQ, same thing. I'm using the same ranges to find these levels. And again, I would expect if for some reason we start to break down, I'd expect buyers to show up between 387 and 384. Okay. So once again, that's what I have for there. And then this brings us into our bigger look. I'm going to now move this away, and we are going to go into trading view and start here on the SPY. So I'm using a quarterly chart, and the quarterly notes, I'm giving you a weekly update at the moment. Last week, we said the quarter closed inside and up, and green arrows did appear. That would be these green arrows again. Remember, when we're talking about a quarterly chart or a candle, every candle represents one quarter. Therefore, anything that I'm talking about, we will not know if it comes to into existence basically until the quarter closes. One thing that I really like about TradingView is it lets you know right here exactly um, how much more time until that candle closes. So we have 2 months and 22 days just to give you some perspective there. So again, I'll give you the weekly updates, but we don't know until that closes out whether or not our analysis is going to be correct here on the quarterly chart. So we resulted in higher highs. Short-term support was 471 to 463. Long-term support at 446. Upper targets are 480 to 500. Coming in this week, I have very minimal on the note side, a slight pullback as we head into bank earnings. To me, this was exactly what we were looking for if you watched last week's broad market analysis. So, am I unhappy about the pullback that we had? Heck no. It was invited, and I really do feel like it was healthy. Overall, the lower range of support is equaling 463, and our resistance this week is going to be 475. Now, where do I get that from? If you look closely here, and again, I will zoom in, 463 happens to be the 50, and what I'm doing is measuring from an anchor point down here to the pivot high, finding those Fibonacci's and just using those Fibonacci's as if this then that. So looking for support here, and then my resistance, as I said, comes in at 475. The 475 level is coming from this trendy edge, this pink level, if you will. This is our monthly supply zone. Okay, so we would expect resistance here. So again, support here, resistance here. All right, those are the two major levels for the SPY going into this week. Now let's go ahead and show you a little bit bigger picture just so you understand. It gets confusing for some traders when they only see so many of the candles. So I want to go back and just show you how beautiful this quarterly chart is. And you can see how important this cloud is. Okay, so this cloud is support until proven otherwise. So when you get caught up with listening to all of the noise out there. And when I say all of the noise, you really got to be careful who you follow. Do they have a process that's actually working over a long period of time? And when I say process, I don't mean their portfolio. Like, I don't care about what these so-called traders are making or anything like that. I just want to know when you're teaching me something, is it working? All right. And you guys can see here that the quarterly cloud has worked for many, many years. So anytime price is pulling back to here, we're looking for a buying opportunity. Of course, we have a way that we execute that with the methodology. And again, we talk about that in the room itself. So look, it's support. This is a very, very minor pullback into earnings. Overall, my sentiment is still cautious, and I'll show you a couple things, the reason why, towards the end of this when we get into our futures. Okay, let's go into QQQ, and let's take a look here. Oh, sorry. There we go. And let's talk about the notes really quick. So last week we talked about quarter close inside and up and green arrow. Price made a new all-time high. The 2024 upper YE means yearly edge, that's one of my indicators, will serve as our short-term support at 396. Long-term support is 376 by 350 and 420 by 422 are our longer-term targets. Now, when you come over here, you'll notice that we stopped at 396. We started to get what I call a relief bounce. So when we go back and look at our notes, they're right on par where we want to be, 376 being that level of support. So again, okay, so 376, 396 was our yearly edge, and that's exactly where we stalled this past week. So basically, my analysis, we stopped at support, and now we're starting to get a relief bounce. And again, I'll talk about that relief bounce a little bit here towards the end of the video. Notice that we had supply last year. We pushed into that supply, we stalled here. We then chewed through supply and made that all-time high that I was talking about. This week, price closed right at support mentioned from last week. This week, look for resistance at 405. Once again, we are using those edges. And then resistance at 405, 386 this week is the lower range of that support. Use these two numbers as my expected range going into this week. All right. So again, earnings week is kicking off. We have some great names that are coming out, and I expect a little bit of volatility and a little bit of chop. Let's go ahead and move on. Our next chart that we'll be looking at is the dollar, and the dollar is very important. And on TradingView, we use DXY. On the dollar, I'm looking for a weekly, not a quarterly. That way I can stay kind of up and up on the idea of the transition of cycles to the upside, to the downside. Is it going to be choppy and so forth? Now, when I do this, I need everyone to understand, and I know that most of you know this, that we found these levels months and months ago. We waited for the dollar to push into this level, and once it pushed into there, this is the same note I gave you almost a year ago. I expect resistance here, but not guaranteed, and I'm not biased. So basically, when I say that I'm not biased, what we're looking for are these signs. Once we broke down underneath this supply zone, we start to look at the stock market as a bullish. Okay. And then we start to look to buy the dip. And this came right into that October timeframe, right when the market started to bid up and exactly where our trading started to bid up as well. Notice that price broke down. It came all the way down into the inside and up formation that I also teach, that there are videos here on YouTube. We came into that, and last week I specifically said on our broad market analysis that I was looking for most likely a bounce here. I then gave you resistance levels using the Fibonacci's that you see on the chart. Notice that price did go bid. We pushed up into the cloud, which was confluent with the 38.2. Now, what I call a relief bounce, and please listen to this, notice that this is a downtrend. We then go bid in a demand zone, but we reject at the 38.2. What we saw in the dollar this past week was merely just a relief bounce and a relief digestion in the overall market. You would think by going out on X or any other platform and looking at the comments that we have entered a bear market or some sort. It is absolutely insane, and I would ask you to run away from anybody that is talking like that with just a couple days in the market of 2024. Now, I'm not saying that they'll be wrong, but I do advise you to look at the market from a if this then that scenario. If the dollar this week, and these are my notes going into this week, we got the bid up as expected, but more importantly, price stalled at the 38.2 of the downtrend as discussed last week. Market continues to see selling pressure if price sustains above 104.6. This could be a choppy week as we wait for key numbers from banks. The bull market resumes if we start to ask below 101. So basically what I'm doing from my chart is looking at my trendy edges and saying, hey, if we start to break back down below 101, then I do believe that the market resumes to the upside. Now, again, how much to the up? We have too many big names that are going to be reporting within the next month and a half. And so I do think that we're entering a cycle of more of an intraday trading where we're going to get volatility up, down, and so forth. So it's very important that we have a routine, and we do, that we come in every single day, and I'll give you those blueprints, and Melissa and I will talk about our targets, where we want to enter, where we want to go short, those type of things, okay? So again, the dollar just tells me that we're entering what I would consider a little bit more of a choppy cycle. Let's go ahead and now move on going into the TNX or the 10-year treasury. This is going to be TNX, just like that. And again, I'll be using the weekly. My biggest thing from last week is I said, hey, I think this is also going to bounce. We bounced. We pushed up into resistance, which happens to be the cloud. But I also wanted to point out, very important, that I believe, until I'm wrong, if this then that these two opposing zones are going to serve as this quarter's basically the levels that we will trade between on the TNX or the 10-year treasury. Okay, so what has happened so far within those 4 days that we had? Not much. It bounced like it was supposed to. And just like the dollar is pushed up into resistance, and then the market started to bid up a little bit on Friday. And again, we'll talk about that here shortly. Now we get into the SKEW. And once again, if you don't know anything about the SKEW, I just absolutely love it. A lot of traders, if you study this, I think it's very, very important for you to go back and add a SPY chart in the background of this. You can learn a lot by looking at this. It really gives you the insight after I just showed you all of the elements, if we are truly coming into whether it's going to be an up cycle or down cycle. Right now, when looking at the SKEW, and I came up with this last year, I changed my numbers around and I felt like I really captured what was happening in the market. And what I noticed was the protect, risk off, and risk on totally changed. So, if this is your first time listening, then you'll love this. If it's not your first time, then you've heard this before. But I always go back to this time right here in 2021 when the majority of traders were having a hard time. Also, that includes me because the market was ripping, but a lot of the signs were saying there's no way that this is going to continue up. But it did. It just kept going up and up. And maybe you rode those trends, but for a trader like myself, it was hard to press the gas after so long. It's kind of like that last part of 2024 where you're 7 weeks up and you're like, can this really sustain? And it just keeps going and going and going. Okay. So what I noticed was they were doing the same exact thing here in early 2023. And then what I did was I created two red levels, all right? Because I said, you know what? If they're going to stay within this range, we need to understand and learn from it. Basically, what I saw was every time that the SKEW started to drop down into this 133, 132 level, the market itself would then bounce again. Right? Because overall, it's remaining and sustaining that bullish side. So anytime it comes down into here, I'm actually bullish. Now, in most cases, you want to start to really protect and risk off. However, this is the big thing. This upper red line, you want to be cautious. This lower red line, and again, this has been happening since April of last year, this is the time to actually buy. And this really throws you off if you've been watching this for many years because, again, this is most of the time we're protect off. So, going into this week, again, if this, then that, the big thing that I'm going to tell you, the SKEW closed at the lower red line. All right. And I'm expecting a bounce in the market, but this is based on historical observation of mine, uh, looking back from last year around the April, May timeframe. If the SKEW remains under this red level for more than 1 to 2 weeks, and I would really say one, we want to be cautious, but 2 weeks. All right. So this week we did close underneath, but if this week we close under, then I do believe we start to accelerate down in the market and we could see the risk on levels, which honestly, I've been waiting for this for a very long time. Matter of fact, the notes that we've kept under the skew for almost a year now is this is what I said. I believe we see a more extreme level in early 2024. Extreme would be at the green lines. All right. So again, we stayed here in 23. Now, the question is, do things change? And if they do, I believe it comes in the form of the skew closing under here again this week. Because if you look across here and just study, okay, and if we zoom in here, give me 1 second there. I'm going to zoom in here. Notice that we weren't staying underneath this level for more than 2 weeks at any given time. All right, so look, there's 1 week, but then the next week, boom, the market rises. Okay, basically, what the skew is showing you is that they're getting fearful and they think the market is going to drop when this pushes up here. So, in the background, what's happening is the SPY is moving up and the skew rises. Okay, here we have 1 week under, and again, it's always followed by a bigger move to the upside. So, I can't help but to think using this historical data that we are coming into this week as a relief bounce only. And again, I'll show you that here in a few minutes and give you the levels that you need. Now, let's talk about the fear and greed. So the fear and greed actually ticked 2 points to the left, meaning it was at 76 last week, and now we're at 74, which is greed. It was extremely greedy. And now we still fall within greed. Now, when I look at this and I think to myself, when I hear this, I think the majority of participants are still on the call side. That's usually what it means when we talk about extremely greedy and greedy. I, from the overall sentiment that I see out there, I don't think this is very accurate. I think that most people are having a hard time with the first week in January, and I believe that the majority of participants are actually jumping on the put side. I would have to think it's more of a neutral, but again, I don't create this thing. This is what it says. I just think it's skewed a little bit at the moment. I actually hear more fear than I do greed nowadays. And I don't know about you guys, but I would say it's about a 80-20. There's 20% of us that still think we're buying a dip, and the other 80% think the market's going to actually crash or something. Okay. So that's what I'm seeing on the fear and greed side. Now, let's get into ES futures. And for ES futures, I'll be using Thinkorswim. Thinkorswim is the platform that I use to execute off of. This is also where our API alerts come from. So when I take a trade, our members get to see it within milliseconds. Now, this does not include future trades, but we do trade futures. Let's go over here to the weekly outlook. And I want to read you the notes and then I'll go over the chart itself. A pullback as we near the kickoff of earnings season. It was expected. That pull brought us back to the 38.2 of last month's candle. But also, this is the upper yearly edge, one of our indicators here. This was the target we talked about last week, and so far, bulls are trying to defend this level. The big thing to remember here is a bounce is a relief bounce until proven otherwise. And let me show you what I mean by everything that I just talked about. So notice that the weekly came in, we made a small all-time high, and then price pulled back to 38.2 of last month's candle. The way that we do this is we put this on a monthly chart. I go ahead and measure last month's candle to the pivot high. Notice that price pulled back to 38.2. According to trading methodology, this is still bullish. This also happens to be our upper yearly edge. So we had confluence there. Bulls came in. Now, relief bounce, all I basically do is take this Fibonacci. I'm going to measure last week's, and we've only, I know it's still on a month, but we only had 1 week of data, is a relief bounce until proven otherwise. All I'm basically saying, just like I showed you there in the dollar, is that we had a downtrend from last week and the relief bounce came from a level that we identified, and I'll show you here on the 4 hour. It started to push to the upside, but it is a relief bounce until it can start to bid over this level here. All right. So the levels, the exact levels that I want to give you is that if we sustain bids above 47.50 and we break last week's trend down, that would be the 618 or the golden Fibonacci, and that is 47.80, then you got my attention on the bull side. Okay, so again, the two levels to the upside. First, it's not a relief bounce anymore if we can get over 47.50. And second, if we start to sustain and hold above 47.80, last week's move down is now, it's obsolete. We're headed right back up. All right. Bears need a close below the 9 EMA of this week. And once again, this is going to be a weekly candle, and we will not know the true meaning, whether it closed below it or not, until Friday afternoon. So the 9 EMA that I'm referencing at the moment is at around 46.50 if we come across here. Okay, and this thing will fluctuate. So again, around 46.60 actually. Buy the EMA if given a chance for a bounce. Also, if that doesn't work, and I'm not saying like buy it and put a 50-point stop, again, we'll talk about it here in the room. But over here, if that breaks down, then I would expect a accelerated move into the trendy edge, which comes in at or around 45.81. Now, again, all of this makes a lot of sense to me for the pullback into earnings as we kick off banks this week. So again, a nice little digestion is all I see. As far as these extension targets up here, the reason why we have them is because we do not have structure up and to the left. So we are using Fibonacci and using fib extensions to find those targets. For right now, this is the weekly. Let's go ahead and move into the daily. Again, this is where you'd freeze your screen and go ahead and put these levels on your chart. These are not in any way me telling you to buy them. However, I do have a system to buy here at these levels when price gets here. Again, if you want to learn about that, come and check us out. Resistance for this week, 47.70. Short trigger, 48.06 if we get there. And again, as far as buy triggers go, 47.01 and 4664. But if these do not hold, again, I'm looking for that move down there towards that 45.80. Now, this is probably the most important chart to me. My overall sentiment coming into this week, keep your eye on the 4-hour imbalance area. This is the same imbalance areas and support and demand levels that I've given you for the last several months. We are not changing this chart. The only thing that you'll notice that's changed on here is now we have a supply zone. Okay, so again, keep your eye on this imbalance area. If we hold this zone, the better the chances we attempt to move towards the 47.50 and 80 levels I just discussed. Regardless, we are now in the cloud, and we are in a cloud, and I expect volatility and chop. The cleaner moves are above and below these clouds. Caution is still warranted. So all I'm saying, again, is this is the cloud. I'm going to outline that. Notice that current price is just barely inside of it. This is resistance and chop within here. It's still resistance. We're not over it, so bulls have not sustained above it. And to be quite honest, even if we get above it, all right, and we could be riding this, it could be a fun trade to the upside or whatever. But as soon as we break out of it, and most likely the majority of retail traders start to get super, super bullish, you're actually running right into an overhead supply zone. So it's going to be tricky regardless, and you got to be really good on your entries and exits. Again, this was the imbalance that I gave you, and we talked about so many sessions. We finally got there, and this is awesome to see because the levels that we found, weeks in advance, hours in advance, worked very, very well. The other thing that you'll notice is the trendy turn signal was right there to kind of save the day inside that imbalance. So going into this week, these are the opposing zones that I would be paying attention to. And as I said, it's going to be choppy. These are the ranges that I would expect to be trading into. And then tonight, we will have our intraday or nightly look, if you will, on how to trade the open. All right. So ES futures, there we go. Now let's go ahead and take a look at the NASDAQ. And it's okay if you do not trade futures, guys. The ES blueprint can be used for your SPY trades and your SPX trades. Let's go to the NASDAQ, take a look at the weekly. All right, so weekly, I'm going to read the notes and then go over the chart with you. Price pulled back to the upper YE, the yearly edge, and found some support right before the market kicks off earnings. Notice the 9 EMA is just under this. So far, this is support. A pullback as we near the kickoff of earnings season. That pull brought back to the 50% of last month's candle. So a little bit different, right? The NASDAQ is typically leading, and I do give it that leeway, if you will. So on the ES futures, we pull back 38.2% of last month's candle. And on the NASDAQ, we actually pull back 50% of that. Okay. This was the target we talked about, and so far, bulls are trying to defend this level. The big thing to remember here is a bounce is a relief bounce, just like I told you on the ES, until proven otherwise. What does this mean? Again, it only bounces to 23 to 38.2% of that downtrend. I'll show you here in a second. Bulls need to prove they can sustain bids above 16,610, and if we break last week's trend down, we would have to get above 16,770. Bears need a close below this 9 EMA that you can see here on the chart to make a true statement. Again, this is a weekly. So even if it flushes, and this is where people get confused, especially amateur traders and veteran traders, is that they place a stop, right, from a big perspective, and they flush, so the market builds liquidity, comes back, and then turns into maybe a hammer or a doji or something like that, and comes right back up. All right, so the market knows where most participants put their stops and so forth. So these levels that I am teaching you and showing you, it's very, very important that you respect the time frame that I'm teaching you. So all of these levels, you have to wait until the end of that time period to understand where I'm coming from. Okay, so again, on here, notice that this pulled back. I've already told you that was 50%. Now let's look at the overall. When you look at it from this perspective, it is a relief bounce until we can get over this. Okay, so again, this is the 618, and it's not until we can bid above and sustain above there that this ugly candle trend is broken. Okay, let's go ahead and move on to the next. This is going to be your daily. This is where you go ahead and freeze it. And while you're freezing it, don't forget to give us a like and please share with your friends. Our trigger long 16,409 and 16,091. Now, I want to talk about this trigger long down here. It is merely just a gap fill. And when I have trendy edges, it might be hard for you guys to see right there. There's a trendy edge there. If this doesn't work, we will gravitate towards this very quickly or accelerate down to this level. Matter of fact, this is the better level, but I also know there's a lot of, psychology in this and that a gap fill, a lot of traders will come in here. So all of these though, because we're trending down, even though it says trigger long, I want everybody to understand that this is a relief long until proven otherwise. So if we come all the way down here and hit this level and say we get a really nice bounce, don't forget to measure or anchor your Fibonacci's and look for that 23 and 38.2, which would come in about right here. Okay. Let's go ahead and move on. Well, before I move on, notice the cloud sloping down. It's right here. We're in it. Again, volatility and chop coming in. Notice here on the 4-hour, these are the same levels I've been giving you for several weeks. These are all the green imbalances, support, demand, so forth. Notice that price came down into the trending edge. It came into the imbalance. It flushed the imbalance, came right back. And the same thing. I really do feel like the overall sentiment, keep your eye on this 4-hour imbalance area. If we hold the zone, the better the chances we attempt those moves towards 16,610 and 16,770. Regardless, we are now in the cloud, and when we are in the cloud, I expect volatility and chop. The cleaner moves come above the cloud and below the clouds. Caution is still warranted coming into this week. Now, let's go over here and talk about just trading in general. Trading is not easy, everyone. Please, please, I think you know that, and I harp on this a lot. Some of the secrets that I think when it comes to trading is you really got to understand your allocation. And when I say allocation, I mean, what are you willing to lose when you come into trading? Remember, if you're trading options and you go home at night and you have a position that's open, that position could go to zero. It's kind of the nice part about options. You're leveraging things, but you also understand, hey, if I paid 500 bucks for this, it means I could lose $500. Whereas when you're trading with stocks, it gets a little bit different, right? You could wake up to some bad catalysts, especially for you traders who are trading things under $10, where there's a lot of volatility and like weird news and stuff. I don't personally like things that cheap because I learned very quickly in the beginning that, I could find myself waking up to a 50% down day, and I did not expect that holding equity. So again, I prefer options, but I do trade equity. I just don't trade cheaper stocks nowadays. And that's just kind of how it goes. So I am an options trader, futures trader, and equity trader. I do not trade Forex. I do get the question if our indicators and so forth work on Forex. They 1000% do. Again, supply and demand is by far, I think, the best strategy out there. But you can use supply and demand with some of the things that you might already be using. So you could see that this type of methodology can really increase your odds of becoming a more consistent trader. Okay. The next thing that I want to talk about is the trial period that we have over at Simpler. And again, I just think it's a great way to figure out, if you would like to hang out with us. A few things, we talk about the API alerts; they're amazing. Let's go to Simpler Trading really quick. And this is going to go to About Us, go to Our Traders, and I show you guys this. These are our traders here. You scroll down into me here, and don't forget Melissa's with us as well. And you just come down here, and then you go to Learn More. And right here is going to be your full access trial, $7 for a 7-day trial, which is really awesome. All right. So come out, hang out with us for $7 every single morning. I'm going to give you my breakdown. We start 30 minutes before the market open. We start with this on the weekend to give you actionable trade plans so that you don't have to wait till Monday morning, 15 minutes before the market open with a plan. So we got everything ready for you. Okay, and then we have our watches. I go from this is Central Time, so 8 to 8:15. I talk about the overall plan for the day, where I believe the market is headed, and then Melissa comes on from 8:15 to about 5 minutes before the open. It gives you her watches, typically 3 watches of entry, targets, stops, all that good stuff. All right. And then as soon as the market opens, I'm live. And then you're watching Melissa and I for about 2 hours. And then after that, Melissa comes on later in the afternoon, and typically we'll share Q&A with everybody, charts, anything that you're looking for. So we are very active in the room. We're always here for you guys, and we truly care about not only your success, but just becoming a more consistent trader and someone that really trades at a Zen state. So I hope to do that for you. If you guys are interested, we'll see you there. And if not, that's okay. Keep doing you, and I wish you luck and have a very, very great Sunday. And this one's for Melissa. Go Cowboys. I hope they win for her sake. And have a safe flight tonight, and we'll see you all guys tomorrow.